Hello everyone, Dean Watson here with Sunset Mortgage. Thanks for tuning in today. Today I'm going to make a video on our mortgage credit hack. Everybody always asks me, Mr. Watson, how can I increase my credit score? I've got some bumps on my credit, I've got this issue, that issue. So today's video is going to comprise of just revolving credit. So all revolving credit is a credit card. Now it could be a line of credit, MasterCard, Visa, Discover, American Express, department store credit cards. Any kind of credit cards you have in your wallet is under this heading right here, okay? So without being obvious, the first thing that you need to do is make sure that you don't have any late payments. Now, I'm not talking about a week late or a couple of days. The credit bureau and the scoring system determines your score any late payments over 30 days. You want to make sure that you do not make any payments late after the billing cycle ends, okay? So that's very important. The second thing a lot of people have a problem with is the lack of credit. So most times, low credit scores are derived from not having any credit at all. So no department stores, no Visa, no MasterCard. A lot of people don't have credit cards because they don't want to get into debt, they don't want to get into problems, but not having any credit cards is worse than having a whole bunch. So just keep that in mind. And the reason for that is because the credit scoring system, the way the model works, is that up to a third of your entire credit score is determined by revolving credit. So if you don't have any revolving credit cards, your scores are going to be naturally lower than somebody that has 3 or 4 or a couple, okay? So keep that in mind too. And number 4, and this is the one that gets everybody jammed up here, is the credit limit versus the outstanding balance, okay? So what I mean by that is, just as an example, let's use some round numbers. Let's say you have a credit card for a $1,000 limit, and you get the credit card and you go and charge it up, and every month you max it out and pay it off. Well, a credit score snapshot is a snapshot in time. So whenever we pull your credit bureau, whatever the balance is at the time we pull the credit bureau is going to reflect in your immediate credit score. So what I'm trying to say is a credit score is kind of a moving target. So it's kind of hard to pinpoint. So my suggestion, and this is what I tell everybody to do, is to make sure about 30-60 days before you apply for any major credit. Now this goes for mortgages, car loans, any kind of personal loans that you're trying to get at your bank or credit union. Always try and pay your balances off in full about 60 days prior to applying for the loan. Or we go by what's called the 30% rule, okay? And what we would like to see is that your outstanding balance is approximately 30% or less of the outstanding balance. Doing this and doing that, paying the balance off, will ensure the highest possible credit score for that particular credit card. Thanks for tuning in, folks. And if you have any specific questions about your mortgage needs, you can always call me at Sunset Mortgage. My number is 251-644-6188, or you can visit our website at www.sunsetmortgagealabama.com. Thanks again. Have a great day.